So right now, in the day, I have VPOC at 2075. A little bit of a finish now to the downside. The day has put in just a little nodule of low volume area. And actually what I'm going to do is make this bigger. If it lets me. Again, something is chewing up a lot of my, there we go. And I think for some reason it might be the projection today. Whenever I bring a screen over here, I think that's the case, the projection. It's just not going. All right, so what I can see in today is VPOC down here at 2075. I can see a little bit of a low volume nub right here at 1925. So I would want to go back and look at the print and say what's really going on here at 1925. If we move back down below it and start gaining any volume, so I might have a trade here, right here at 1950 long. 1950 long, looking for this to try to move back up. A little bit of a finish to the downside. 1950 long, most likely have a stop no more than 1875. So I'd be looking at about a 3-tick stop on that trade, because if it starts coming back down below this intraday low volume area and starts building out volume below, it's most likely now going to test 17 quarter, 17, where we saw some level of buyer interest yesterday, and I just have no desire to carry a trade that far when I can just get out of the trade and get back in down here. So the last, and this is why we look at swings, the last swing low from yesterday, not the closing swing, but the last swing low where we saw buyers step in, was right down here at 18 quarter. And that's what we're seeing again right now, is buyer conviction at 18 quarter with VPOC above. So we're getting acceptance higher on fair price than we did yesterday. So I would take that trade 1950 as long as the print gave me an indication to take it. And I would probably look to scale right out ahead of this 2250, like around 22 or 2175. Not necessarily close the trade, but I would look for a test up to 2175 and possibly higher. Now, what this market has done this morning is it started just above, let's just say right at the high from yesterday, which was 2350. So it started right around 2350, 2375. Yeah, the overnight session, sorry. I said yesterday, but the last swing low for the overnight session was down here at 1850. That's correct. Sorry, I said yesterday. So what I'd look for now is a test back up to, wait, this is slow. 22, got a little bit of a low volume area here. We had a responsive selling, and I would look to scale up here and then possibly higher. So the market's come down. It started to gain acceptance below yesterday's high, which is over here, 2350. So my next trade, if I didn't get in on this one, or it starts coming back against me and moving lower, might be a long down around 1725, because yesterday I can see that this did at one point provide an area of interest for buyers. If the print shows me an opportunity, I would likely take that long and give it about 3 to 4 ticks. 3 to 4 ticks as a stop. Because if it comes back down into this area, you can see a little bit of a distribution here from yesterday. We may see price come down here, and this may be where buyers start to re-engage. So again, I find my area. My latest one would have been here long. I watched the print. If the print continues to show me that buyers are engaged, I take my first profit target. And as long as they continue to get engaged and stay engaged, I'm okay with a pullback. But I'm looking for price to continue to test higher. And then I'm watching the print, knowing that this was my last swing high, 23.50. I'm watching the print to show me when to potentially close that trade. Yeah, 1875, I think I clarified this, was the pre-market swing. 18.25 actually yesterday was the pre-market swing low. Not yesterday's. Question, why wouldn't this morning's upper boundary rejection cause a test below today's developing VPOC? Maybe you could rephrase it. I don't know that I quite understand that question. But let me ask that question again. I'll take a look at it. So I want to go through this again. The first if then, where's price opening relative to yesterday? Second if then, what's it doing at the open? Am I getting trade on both sides of the open? Where's the VPOC relative to the open? Is it starting to build higher, lower? Are we getting trade just to one side of the open primarily? So I want to see what happens. The third if then is if the first trade scenario loses. So it starts moving, we got a trade scenario. If the first trade, if the wins were good, I mean the market's doing what we expect it to do. If it loses, then what are you going to do? What does that tell you about the market? What are you going to do? Focus on the intraday profile levels and specifically the order flow. If you had made a trade plan, for example, let's say I was looking for a long at 17.25. The print showed me an opportunity to get in. I got in long. And not only did price come down, but it started building volume below 17.25. I better be ready to know what to do next. And that may be if I start getting acceptance below 17.25, I got to be careful because that high volume area is just below it. But I may decide to take a short off of 17.25. What I have to determine is, in today's market, what are these buyers and sellers trying to do? And compare that to the overall volume profile that says if 17 area holds and buyers start re-engaging, we're likely going to see this. And then if we see this and this happens, we're likely going to see this. If it doesn't hold to the downside, and we start getting acceptance below 17, then what's most likely going to happen? And that's where I make my trade. Now, what you'll not ever hear me say is what is going to happen. I will say what is most likely going to happen. And that's a lot of the developing market structure and if-then scenarios. If this, then that. And sometimes I'll just let the market start to play out and see if it's gaining acceptance in a specific area where I'm expecting acceptance. If the market's showing true to its rotation and what buyers and sellers are saying in the print and in the volume profile, then I have more confidence in my next trade. And I may wait for that next trade. Remember, I'm managing to an objective, a financial objective each day, and trying to minimize my loss. I'm not trying to get necessarily a 10-point run on the ES. I'm trying to manage to a financial objective. If you try to pick the tops and bottoms of every swing, you could wind up in trouble. All right. How do we define areas of opportunity? The value area was just an example. Low volume areas, either daily, weekly, current rotation, longer term. Test areas of high and low value. Value area is just one example. I showed you an example the other day where a naked VPOC, a VPOC from a previous day that hasn't been touched in the RTH session. Now, I want to be real clear about this. If in an overnight session, price moves up or down and it tags a naked VPOC, and the morning session, the RTH session starts, unless the RTH session does the same thing, it's still naked. It's still open. I'm specifically watching that RTH session. Just because it hits it in the overnight doesn't mean that it's satisfied. Previous day's highs, lows, we've talked, in fact, this morning, if we look at the print, I'm fearful of bringing, not fearful, but I hesitate bringing my charts over now just simply because of the lag that I'm getting. All right, I'm going to try to drag this over again. At the break, I may actually just restart my computer. I may take a break earlier than later to restart my computer so that I can see if I can get rid of this. Anyway, here's yesterday's high, right at 23.50. And when price came down and came back up to yesterday's high, you can see that at least in the print, weakness at the offer, strength at the bid, there's an opportunity for a short. And what this is saying is, right, if we're reading the story of the market, we had an initial open, an initial push higher. Price came down below yesterday's high of day, back into yesterday's range. We're getting acceptance into yesterday's range. Held. So in order for me to take a long now, I really need to see price get through yesterday's high with some strength and conviction. Or the 17 quarter area may be an opportunity as well for another long. But right now, that may be different later, but right now this market is accepting price within yesterday's range. I'm going to try to move this back. All right, previous day's highs, lows, closing swing high, low areas. Multiple reference points at the same area are points of convergence or confluence and provide higher probability of trade opportunities. What do I mean by that? I mean that if an opening or closing swing low is, let's say we have a closing swing low yesterday, or closing swing high of 19. Oh, we did. Oh, that's perfect. Our closing swing high from yesterday was 1675, and we have a composite low volume area at 17. 17, so one tick apart. When you have multiple levels that come together, it provides more confluence. So when you get the signal in the print to take the trade, probability of it working, not working, you could say is 50% on any trade you might take. But if there's evidence that buyers have interest there, then there's a higher probability that they're likely to step in again. If they don't, then you know something has changed. And if something has changed, you look to see, why aren't buyers buying here again? What happened? And if they're not going to buy here, where are they likely to buy? And start managing to that information. All right. Yeah, so go back to the question. We were discussing the likelihood of price pushing higher off EPOC once it had rejected a lower boundary of distribution. Now, why wouldn't this present the opposite scenario? Yeah, if price can't get through a VPOC or a high volume area, VPOC typically would be of the day, or a high volume area on a longer term profile, then I would look for price to start testing in the other direction, and whichever direction, that low volume area is at risk. Doesn't mean it's going to break, just means it's at risk. So it's the same in both directions. Alan, if you could, I must have said something. You asked, why is that? Could you tell me the context of that question, what I was talking to? Somebody says that they've lost sound. Can you all still hear me? Okay. I'm going to have to, thanks. I need to let somebody know that you should log out. Okay. Why is that? I think the context of the naked VPOC is, if a naked VPOC gets tagged in the overnight outside of the RTH session, I still consider that open. I don't consider that satisfied. Is that right, Alan? Was that the context? Yeah. Why is that? Because in my experience, that's just me, but my experience is that 80 to 85% of all the volume on the ES is in that RTH session. So the drivers of price, at least when I'm trading, mostly trading is the RTH session. I care about the sentiment and the conviction levels of that market, of those participants. So if they're not, if the RTH participants, let's say the naked VPOC is lower, if the RTH participants aren't willing to go down and test that, and they keep bringing price higher, that's my context for my trade, is they're not interested down there. They don't consider that fair price. I'm starting to look for a long. That's why. Okay. And in the same vein, if I were trading in the UK and I really cared about trading the European session time, I actually would build a volume profile um, for the Globex market, and I would build one that just showed me the most current context of the European session or sessions. If I were trading the Forex, the 6E, the U.S. Euro pair, Euro US pair, I would absolutely have a volume profile that just included the sentiment of the European session. Because I really care about the context of those participants, because the context of those participants may be different than the context of the participants in the US market. And I at least want to understand what their levels are. If nothing else, it shows me what their levels are. And I can, the worst thing that happens is I put it on my chart as a heads up, and price comes up or down to it, and it blows right through. And I would have the Globex Globex data up as well. Tomorrow we'll go through the Euro, the 6E. And context for me again, and I'm glad we're going through this again, context is relevant to the most current participants. Remember, when you hit that button to buy or sell, that is your moment of truth for that trade. You're setting your anchor, and all you have is the ability to manage your risk or take profit and manage your profit if it moves in your direction. If you don't understand the context, and you can look at a low volume area and say, okay, let's say your price is coming down to a low volume area, and the print shows you weakness at the bid, strength at the offer. Great. Sellers are walking away. Buyers are stepping in. Time to go long because you believe there's a higher probability it's going higher. But what's most important is the context of that print as it develops from the time you enter your trade. And as long as the print continues to support your decision, you're in good shape. But if the print, which is the most current context of the market, starts to not support your decision, then you've got a decision to make. Are you going to give them a chance to let it work and to work it out? If so, then where's your stop? Are you going to get out of the trade, see what happens, take the next one? You have a decision to make relative to your risk assessment of the context of the market at that time. Again, if you see strength, let's say you get long and you see strength coming in at the bid, you know what? That in itself doesn't say that you're going to lose in the trade. It just says there's additional pressure. There's additional activity, selling, aggressive selling, contracts hitting the bid going on. Well, what if there's another 1,000 contracts that hit the bid? More aggressive selling. Is your risk higher? Your perceived risk is higher. But what if it goes to 2,000, 4,000? But then it holds. And you can see buyers start to step in. And you know all those contracts that came in short right there are likely to get stepped on. So just having, I want to be real careful, just having volume come in back at the bid if you're in long doesn't mean your trade's going to lose. All I ever wanted you to do is say, I'm long because I saw activity at the bid going away, activity at the offer coming back, more activity at the offer, but now that selling has re-engaged. I need to pay attention to this. That's going to keep your head in the game. It's going to keep you objective. and it's going to allow you to effectively manage that trade. So context is local. I will tell you in my experience, context can change between sessions. And as we saw yesterday, you take a situation like Russia and Ukraine, you take a situation like ISIS, what's going on in Gaza Strip and Israel, any one of those scenarios, Ebola, whatever it may be, and anything, even an announcement from a major bank, has the potential to take your perception of the market and how the market is currently auctioning and set it on its side. Market can do anything at any time. And that's why, for me, I build the if-then scenarios. I keep my stops in place, because as long as I'm managing my risk, let's say I get into a trade long, there's news of some attack in Ukraine, or something in the world happens and causes the market to immediately slam down, takes out my trade, and is moving down very quickly. My first reaction is not to get in short. My first reaction is step away, make sure my cursor is not on not in a position where I might accidentally buy or sell. Take away that temptation, because I know something in the market emotionally just happened, or somebody dumped a bunch of contracts. And I have disciplined myself to immediately go to news, a news source, to see if I can see what's going on. And if this seems to be random and there's no news to support the move, then I'm hanging back. If there's news to support the move to the downside, now I'm looking for a logical area for a pullback, for a potential short. A lot of information. So multiple reference points at the same area provide convergence or confluence. Higher probability, better opportunity, in my experience, for those trades. So once you've identified the places that represent the highest probability trade locations, based on the market's current context, then you begin building your if-then scenarios that will be your trading plan. So let's talk about overnight context and adding the overnight activity. One of the things we've talked about you want to pay attention to is what happened with price and volume from 7:20 a.m. Eastern. If you're trading the US RTH session, you got to start paying attention to 7:20 to 7:30 Eastern a.m. because that's where the US market participants start entering and start positioning. And you start to look to see if the sentiment from the overnight is the same or if there might be a difference. Pre-market moves that are not based on news provide insight as to potential sentiment for the RTH session. Remember yesterday? Yesterday was a perfect example. We had that volume profile with that little nub down at, I believe it was like 05, 1905, 1903 quarter, I think was the number, 1903 quarter. And in the 1 minute chart, a significant amount of value came in to push that up. It was really evident that a longer term participant stepped in there and then held and continued to push price up. The fact that VPOC was sitting around a longer term low volume area, I've just disciplined myself to stay hands off. But what it likely meant in the pre-market was that we were going to see price continue higher because somebody stepped in with a significant commitment in a long position and said, no, 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 we're not going lower. So that provides context. Now, if that level gets stepped on and price comes through there soundly, then you can probably expect to see price move back down into the 1800s and lower. So pre-market news, you guys have asked me about that. We want to consider pre-market news or any news activity. First thing we want to identify was price impacted by the news? If so, did price return to its location, back to where it started before the open? If so, continue with the plan. If not, price didn't return, it's in a new area, we can see volume growing, then we identify the price where the move took place, we confirm that volume push and ongoing support, let's say it went higher, ongoing support by buyers, we mark that area on your chart as a potential trade location, and you update your plan to say at the open, if price comes down to this point where in the pre-market we can see buyers holding after this move high, if the print tells me I may have a trade there long. If price wasn't impacted at all on the news, you just continue with the plan. So what I have here is a workflow. And relative to context, when I consider news, I consider news to be a trigger to create emotion in the market such that the normal auction process where buyers and sellers are interacting to drive value, define value, test higher, test lower, whenever there is news event that can create emotion in the market, my experience is that the normal auction process is set aside. And if I'm using the auction to trade, and the auction, I don't want to say the auction process, whether price goes up or down, technically the auction process is what facilitates that price movement. If the normal auction structure where it's creating value, building out the profile, is at risk, I typically will step aside. Because you never know, you never know anything. But volatility is quite a bit higher. The potential to get stopped out on trades, to get whipsawed out of trades when emotion is higher, and there's no apparent footing, there's no real obvious place where sellers are going to fail, buyers are going to fail, sellers are going to have conviction, buyers are going to have conviction. When that happens, then your ability to stay objective and manage your risk is minimized significantly. All right, we're going to take a break here in a few minutes once we get through this. So here's a workflow. You get news, pre-market news. This is relative to your trading plan. So on Thursdays, we get a lot of pre-market news. This morning with Draghi, we got a lot of pre-market news. Was price affected by the news? No. Well, then you just continue with your plan. You're done. News didn't affect. Stay with your plan. There wasn't any additional volume. There wasn't any additional reaction. No need to change your plan. If price was affected by news, then before the open, did price return back to that previous area where it originally started? If the answer is yes, the auction kind of returned to where it was auctioning prior to the news, then continue with your plan. If the answer is no, then you need to identify price where that move happened. Where is the price where price took off? Where it started going higher or lower? And then you want to confirm volume support of the new area, whether it be higher or lower. You want to see volume being built out. You want to see rotation. You want to see a volume area growing in that area to confirm acceptance of that new area and support. The other thing you want to check is during that news, did it cause price to pass through a key low volume area or high volume area? Let me give you an example of that. As soon as my charts come up, show you what I'm talking about. Okay, so we have a low volume area on the composite chart here at 17. Then there's another one up here around this 31 level. Let's just say, for example, news hit this morning and ECB said we're adding 25 billion in purchases every month, and they raised their participation level significantly, and price shot up beyond this 31 level. And in the pre-market, we started getting rotation around this 33.50, 34 level. So that news pushed price up through this low volume area, especially if there was a test lower that failed. If we start seeing acceptance above here, above this level, and we're seeing rotation in the pre-market now, and any attempt to the downside is met by buyers here, that's what I'm talking about. Did price come through a low volume area? Come on, there we go. And if the answer is yes, then update your plan to reflect the nearest low volume area or high volume area. So if that were the case, then what I would do is say, as part of my plan now, I'm looking for a long off that 30 to 31 area. And I would look to see if there was any additional confluence, anything else that might suggest that buyers were going to step in at that level. And then I would look for the print to confirm. And if the print confirmed, I would be long. I would be long, and I would be looking for my first scale out ahead of the next highest high volume area. All right. Can I show the print I'm looking for to take a breakout trade? I don't want to say rarely. In the course of my trading experience, and I think oil has conditioned me on this, is I'm not a big fan of breakouts. Price certainly breaks out and breaks away, and we get a new probe, exploration of new price. What I like to do, because I found it to be more consistent in terms of my risk reward, is if price breaks out into a new area, that's fine. I'm looking to see where the low volume area is, and then let's say it breaks out to the upside, and then I will take a long on a retest. I will take a long on a retest of that area. Or if it doesn't come all the way back down to that area, but it's coming lower and I can see the bid failing, offer getting stronger, then I'm getting back in. And the reason is because if I take a breakout, what I don't know is if it's going to be a stop run. And I can tell you this, that up until 2013, when our markets just straight up, I rely on the market to provide rotation, right? Normally, 85% of the time, the market is in balance. 15, maybe 17% of the time, so 80, 83, 85%. There's a much lower percentage where the market is in discovery mode, which is breakouts. And so if you're looking, or a breakout is a style of trade, that's fine. It just means it's likely to happen less. And in 2013, because I depend upon a normal market rotates. Just because participants have to liquidate inventory, the market rotates. If nothing else, the market moves back down because buyers have to liquidate contracts. They release their inventory, which makes them sellers. And so many times trying to take that trade with a move back down on the ES often just meant that I gave my money away. So what I've conditioned myself to do, instead of just taking the breakout, let the market go, let it prove that it's building volume, that there's acceptance above this level, and then take that on a retest, or when on a pullback or a retest. Can I make that chart available on the website with all the other materials? Oh yeah. Yep. It may take me a little bit today because I don't have it to DB. I just need to pull this off on its own slide and I can make it available. Yep. Let's do this. It is 10:48 Eastern, 9:48. We've been going for almost 2 hours. So let's take a break and come back at the, say, the top of the hour and get going again, because I still have more to go through relative to the homework and building the trading plan. And we just hit our 1750. So let's take a quick break, come back at the top of the hour, and we'll get started again. I gotta at least check my services on my machine and see if I've got something running in the background that's killing my CPU. So I'll come back at the top of the hour.